what exactly is happening at Snap-on, the maker of high-quality tools and diagnostic equipment for auto repair shops and many other industries? This is a company we've followed for years, and while Snap-on has an excellent multi-year track record, stock's up more than 150% over the last 5 years. It's been struggling a bit of late, with the share price down slightly year to date. Problem, in recent quarters, Snap-on has been able to deliver some major earnings beats, but some people feel the company's struggling to meet Wall Street's revenue estimates. And look, we saw the same thing when Snap-on reported this morning. They delivered a juicy 13-cent earnings beat off a $2.23 basis, really fabulous. But some people said the revenues came in a bit light, up just 2.4% year over year. You might be impressed with Snap-on's ability to squeeze more earnings out of relatively slower revenue growth. But instead, these results were greeted with some disappointment, and the stock sank more than $5 or 3.45%. Now, some of that's because Snap-on had run up pretty substantially over the past month, making it, some people think, priced for perfection. But some of the selling had to do with concerns about credit quality at the company's financing arm. We're going to talk about that. Still, I think this could be an instance where the market's harsh verdict may turn out to be wrong, in which case you might want to consider buying the stock into weakness. Before we make up our minds, let's dig a little bit deeper with Nick Pinchuk. He's the chairman and CEO of Snap-on. Learn more about the quarter and get a better sense of what's happening. Mr. Pinchuk, welcome back to Mad Money.
Good to be here.
Good to see you.
See you again.
All right, now, in the conference call, you said the earnings are good, but you did say, listen, we're struggling in military, struggling in aerospace.
Yes.
And is that the problem? Because the auto business seemed quite strong.
The auto business was strong. I mean, the tools group, which is in the auto business, up 5.8% organically. Right. The RS&I business, which sells to garage shop owners and managers, up 5.2%. So that was a solid business in the quarter. The industrial business was hurt by military being down multiple double digits and the international aviation being down. But U.S. aviation was up, power generation was up. So if you eliminated those two difficult areas, the total business would have been up close to 5%, and in commercial industrial would have been up 3%.
Well, the secular trends are still there. You talked about 12-year car park.
Correct.
And obviously, as we even talk about computers, semiconductors being in cars now, self-driving cars, all of those things play to your strength because you're a diagnostic company.
Right, we're a diagnostic company. We're, as you said, we're kind of a technology company behind all these tools. You know, we have the aging of the car park, technology's changing, and the other thing that's happening when you talk about self-driving cars, more precision, more torque. We have torque wrenches here. We have a full range of torque, so people can go from heavy-duty truck to light cars and torque to the exact specification which is necessary. Alignment. You know, you have those alignments on your vehicles. You know, you have those lane departure. Right. If you don't have your alignment correct, or you have adaptive cruise control, and you don't have your alignment correct, you're going to have problems.
Oh,
so more alignment.
Okay, I got it. So just the basics don't work, then that stuff won't
Exactly.
work.
So the more that cars go automatic, the more precision has to be with the tooling and the repair, and we have the tools to make that happen.
Okay, now, in the conference call, there was a couple analysts who talked about how you're selling some big-ticket items.
We
Those
are.
have to be financed.
They do.
There were also some comments in a very respectable publication called Grant's Interest Rate Observer. They're talking about someone who says once a guy buys a socket wrench from Snap-on, unless he's losing his socket, he probably never buy another one. So how do you sustain that growth rate? They're saying that you sustain it by by having a very big loan department. Yeah. Now, how do you first answer that? Because it is true you're selling bigger stuff, and what's the worry there?
There's a couple of answers to that.
Okay.
First one is, guy buys a socket from us, we guarantee it for life. He'll keep it. But the car's change, so he needs a different socket soon. Okay. That's one thing.
Right, so you can't just have one socket and be an auto
Secondly,
mechanic.
we've been Snap-on has been in finance for more than 50 years. That's gone through more depressions and more changes than you can shake a stick at, right? And it's a strategic arm of our business. We have a credit company, but they don't really sell credit. They support the tools group. Okay. Now, what people have looked at is the growth of the credit company has been strong.
Yes, it has.
But you would expect that because what we have done with Snap-on tools, I've said it on this show, those vans, our rolling retail space, we've expanded them with these rock and roll cabs that are company-owned vehicles that give them virtual time sharing and allow them to sell more of those big-ticket boxes. Those big-ticket boxes, so that drives more financed sales.
Okay, so let's go back to the criticism. To me, when I looked, I said, geez, it has ballooned. But at the same time, I thought that what you should be thinking about is the delinquency rate, which has been steady the whole time. You guys seem to know who to lend to.
That's right, that's right. You know, the credit is called in by the airstrikes are called in by the franchisees who see the people every day and know who they are, and they're the collectors. You know, in the greatest recession of our time, the greatest recession of my lifetime anyway, the last one, 2009, when when garages were cash rich and confidence poor. You might remember this.
Yes, I know. You came on the show. You talked about it the whole way.
And default was in the year.
Yeah.
The default rate in the portfolio moved from just under 3 to just under 4, and the overall yield is 17.9%. So this is a good business. You see, and one of the things we've talked on this show, things like this Veris Edge diagnostic. You talked about diagnostic.
Right.
This thing revolutionizes repair, and more diagnostics are needed in the garage. So you have the idea of us expanding the value of the ability of the vans by these extra vans and allow them to sell these big tool storage boxes. And then you have the drive for more diagnostics. This thing costs $9,000. It's financed.
Okay, that's
you see what I mean?
Let's go there, because when I open the hood of a car now,
yes,
versus a '94, I looked at a 1994 Range Rover the other day.
Right.
You open it up, it's all mechanical. I mean, I think I could pull the stuff out.
Right.
You open a new one, you can't see anything.
Exactly.
But so you can't really work on those new cars without this, right? It's almost impossible.
40 to 50% of the repairs in the car park, the 300 million unit car park, require a diagnostic unit, but 80% of the new cars. So this one, which would be financed,
right?
Veris Edge allows you to it tells you what the car is saying. It allows you to run it through cycles. It allows you to test whether the component it says is wrong is really a problem, and it tells you what 800 million repair records say about what you should do about that car. This is revolutionary.
And I don't think there's any other way to stay an auto mechanic in this day and age. And I have to tell everybody, Nick has never said, listen, I'm not going to talk about the financing. Always proud of it, because it's been such a great record that you have.
Business.
And I wish that the critics would have talked with you, because they would have found out that. That's Nick Pinchuk. He's chairman and CEO of Snap-on Incorporated. I think it's a rare blip. I think it's the right stock. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.